Nilesh, which part of the market do you have comfort buying into right now? Because it seems like a one-trick pony. People are buying IT or they're hiding in FMCG again. There's nothing else that money seems to be going in.
Yeah, that's likely to be the trade for a few more quarters. And I think clearly, of course, while valuations are attractive on the IT side, and given that the sector is perhaps likely to come out of a sluggish spending in the developed markets on technology, it's quite possible that IT still has a strong chance to outperform, given that valuations are still at kind of at a discount to the broader market. So I probably believe that IT is likely to be the big sector where a lot of liquidity will flow in. I think pharma valuations are not expensive, and so you still might see liquidity getting allocated to pharma. I probably believe that on the consumer side, it's fairly overstretched. We've clearly seen some of the consumer names crack significantly, stocks like HUL, Tata Global Beverages, where valuations had kind of overstretched themselves. There have been corrections. So I clearly believe that I'm not quite sure that the consumer is the place to kind of hide, given that valuations have become frothy, and a lot of the growth which companies have been showing in the consumer space has come in largely from inorganic initiatives or geographical expansion outside India and getting into markets like Latin America and Africa. So I clearly believe that IT and pharma is probably an important pack where you could see pockets of outperformance. I'd still probably believe that oil and gas has a chance to outperformance, though of course given the political development in the last 24 hours, I'm not quite sure how easy it's going to be to continuously hike diesel prices and really kind of come out with a very constructive gas pricing policy. But I think I'd probably still be hopeful of that, and it's quite possible therefore that oil and gas too could contribute to outperformance.
What about all the supply that's coming in from the government, Nilesh? There would be the sale issue first and then phases like Coal India. How would you approach those?
Yeah, clearly I think this whole the OFS in terms of reduction of promoters' equity as well as disinvestment, I think both put together I think is a risk to the markets. I think over the last few months that's essentially been crowding out capital which could have potentially flown into the secondary market side. So I clearly believe that that's something which probably is not healthy in the current environment, but I clearly believe that from a very macro perspective it's important, because clearly that's an important variable which can really help achievement of that fiscal deficit target of 4.8%. And I think it's also important that this target of 54,000 crores is perhaps achieved in the first quarter, because if that target is achieved, then clearly the government has the money to basically start spending on various capital projects. If this 54,000 target is not achieved in the first quarter, I think that's going to put a lot of pressure on government's finances, and therefore will restrict the government's ability to spend on various infrastructure projects, particularly the road construction projects of about 3,000 kilometers. So I clearly believe that while it may not be directly positive for the markets, it might actually be negative for the markets. But I think from a macro perspective, it's good if the disinvestment target is really achieved, and that too on a front-ended basis.
The really crunching blow has come to the entire auto space, Nilesh. How would you approach that? I mean, have valuations corrected enough, or do you think demand is going to contract some more, as will prices of these stocks?
I still believe that there is a downside risk to auto companies, and I clearly think that the consumer sentiment or the demand sentiment is pretty weak. We've clearly that's manifested over the volume data that we've seen for the last few months, where you've actually seen on a month-on-month basis increasing deceleration in terms of growth, and I clearly think that that's worrying. And I really don't see a situation where that's going to reverse in the next few months. So my sense is that I think demand is still going to be sluggish for the auto companies, and I think in that kind of an environment it's quite possible that the sector could continue to outperform, and there could be downside risk to prices and valuations.
So what's a good asset allocation call, Nilesh, for this year? Because it started off looking like it's going to be equities all the way, and now with limited rate cuts expected, even fixed income is looking tricky. Equities have lost their way in the last 3 months. Gold has come down. Where do people put their money?
Yeah, I clearly believe that that's going to be continuing to be a challenge, but I still believe that that I think as over the next 3 to 4 months we see increasing correction in the marketplace, and especially if the markets does get to that level of between 5200 to 5500, more so towards 5200, I'd probably say that that would be an extremely good opportunity for investors to get overweight on equities. Most of the domestic investors have been sitting out, have been underweight on equities, and I clearly believe that that would be a very attractive price point to get in. Of course, you're not going to see an immediate upside, and I think by and large, till all the risks are clearly out of the way, it might be too late. So there's a saying that you always pay a price for a cheery consensus, and I clearly think that at 50 to 5400 levels, while the sentiment would be very weak, but I clearly believe that from a price point of view and from an entry point of view, that would be an extremely good entry point for medium to long-term investors.
The holy cow for this market have been private banks, Nilesh. I mean, nobody has or at least till recently had a bad word to say about them, and all of a sudden some question marks have popped up. Do you think even that could be vulnerable to a correction?
Absolutely. I clearly believe that over the next 2-3 months, if we see a meaningful correction in the marketplace, clearly private sector banks are clearly one important segment which look perhaps as vulnerable as the rest of the market. They have been good defensive bets. They have held out despite the carnage on the street, but I probably believe that at this stage where valuations are between 3 to 4 times price to book, I see that in this kind of an environment, and probably that's an oasis of gains for international investors, where they've put in a lot of capital into this sector. And I think if the risk of trade does play out over the next few weeks or months, clearly private sector banks would be an important pocket where they would basically be pretty much tempted to pull out liquidity and book the gains that they have made.
Slipping some more now, mid-caps down to the lowest point of the day in trade, 0.7 of a percentage point. Within the market's been more like holy cow with an exclamation mark rather than a full stop for the banks. But Nilesh, just on that point you were making about the mid-cap space, the last time we fell so much, it started off that vicious cycle of individual stocks blowing up because of margin pressures, promoters going belly up. Would you fear that situation could come back to the market if indeed losses get exaggerated through the course of the next few days?
Yeah, I clearly think that risk is surely there, because of course promoter pledges, etc., obviously are a much larger phenomena for mid caps. But I probably believe that phenomena is less at this stage versus what it has been over the last 2 or 3 years. So clearly I don't believe that's a bigger risk. I think the bigger risk right now in that segment would be basically that when is basically the earning cycle going to turn, and I think it's also the risk of owning them, in the sense that most investors probably saying is that there'd probably be a better time to kind of rebuy these or repurchase these stocks, and therefore we would probably want to re-enter later. So it would be more like a phenomenon of sell now and buy later rather than anything to do with promoter pledges. But then I clearly believe that that's something which really creates the opportunity.
Okay, Nilesh, we'll leave it there. Thanks as always for stopping by.